Welcome to Investment IQ Insights. Today, we're unlocking the secrets to building real estate wealth in 2025. Are you after passive income and steady dividend growth, but want to skip the headaches of being a landlord? Good news, you can invest in real estate and collect income without ever fixing a leaky faucet. Today, I'll reveal 3 top REITs for consistent dividends and long-term growth, handpicked for 2025. Quick reminder, this is educational content, not financial advice. Always do your own research. Ready to start your real estate empire? Let's dive in. First up is Realty Income, ticker symbol O, widely recognized as the monthly dividend company. This REIT has built a reputation for delivering consistent, reliable income to its shareholders, and it's become a staple in many income-focused portfolios. Realty Income stands out because it pays dividends every single month, not just quarterly like most stocks. For investors who want regular, predictable cash flow, whether you're living off your investments or reinvesting for growth, this monthly payout is a huge advantage. Since 1969, Realty Income has paid over 650 consecutive monthly dividends. That's more than 5 decades of uninterrupted payments, weathering everything from recessions and market crashes to periods of high inflation and economic uncertainty. Their commitment to shareholders is rock solid. Even better, Realty Income is a proud dividend aristocrat. That means they've increased their dividend for at least 25 straight years. In fact, they've raised it over 100 times since 1994. This steady growth in payouts is a sign of both financial strength and a shareholder-friendly mindset. So what's their secret? It's the triple net lease model. In these leases, tenants are responsible for property taxes, insurance, and maintenance. That means Realty Income collects rent with minimal expenses, resulting in stable, predictable income streams that are less affected by rising costs. Their portfolio is enormous, over 15,000 properties, leased to well-known, financially strong tenants like Walgreens, Dollar General, FedEx, and 7-Eleven. These are essential businesses that tend to perform well in all kinds of economic environments. No single tenant makes up more than a small percentage of their rent, and their properties are spread across the United States and Europe. This diversification helps minimize risk. So even if one tenant struggles, the overall impact is limited. Right now, Realty Income offers a dividend yield of around 5%. That's a rare combination of safety, income, and growth potential, especially in today's market, where reliable yields are hard to find. The management team is experienced and forward-thinking. They recently expanded by acquiring Spirit Realty, which added even more high-quality properties and tenants to their portfolio, further strengthening their market position and growth prospects. Realty Income isn't a get-rich-quick stock. Instead, it's about building wealth steadily over time. Those monthly dividends can be reinvested, allowing your income to compound and grow year after year, creating a powerful snowball effect. With Realty Income, you get the benefits of real estate ownership, steady cash flow, and long-term appreciation, without the headaches of being a landlord. No late-night calls, no repairs, no chasing tenants, just passive income, month after month. Their massive scale means they can borrow at lower rates and access the best properties on the market, fueling ongoing growth and giving them a competitive edge over smaller players. In short, Realty Income offers monthly cash flow, a fortress-like business model, and a blue-chip reputation that's been earned over decades. If you want true sleep-at-night investing, where you don't have to worry about wild swings or unreliable payouts, Realty Income is a must-watch for 2025 and beyond. Consider adding it to your watch list as a foundation for stability, income, and long-term growth in your portfolio. Now let's move on to our next REIT and see what other opportunities are out there. Next up, let's dive into Prologis, ticker symbol PLD, the undisputed global leader in logistics real estate. When you think about the backbone of the modern economy, especially the e-commerce revolution, Prologis is at the very heart of it all. If you've ever ordered anything online, whether it's a last-minute birthday gift or your weekly groceries, there's a good chance your package passed through a Prologis warehouse at some point on its journey to your doorstep. Prologis owns and operates nearly 1.2 billion square feet of logistics space worldwide. Their facilities serve industry giants like Amazon, FedEx, and Walmart, making them a critical player in powering the global e-commerce boom and ensuring goods move efficiently across continents. The ongoing shift to online shopping, combined with the growing need for resilient, flexible supply chains, means that demand for Prologis' state-of-the-art facilities just keeps climbing. Their warehouses are essential infrastructure for the digital age. But Prologis isn't just about storage and shipping. They're also positioned to benefit from the rise of artificial intelligence and cloud computing, with properties that are perfectly suited for high-powered data centers and next-generation logistics technology. Financially, Prologis is rock solid. They boast an A-rated credit profile, a disciplined and experienced management team, and a truly global footprint spanning 19 countries. This scale gives them a unique advantage in both stability and growth. Their dividend has grown at an impressive 12% annual rate over the past 5 years, far outpacing most other REITs and providing investors with a powerful combination of income and growth. While the current dividend yield typically sits in the 3–4% range, the real story here is the rapid pace of dividend growth and the strong total returns that come with it. This is a company that rewards patient, long-term investors. Their modern, high-tech warehouses are equipped with robotics, automation, and advanced inventory systems, allowing them to command premium rents and maintain high occupancy rates, even in challenging markets. In many ways, owning Prologis is like owning the infrastructure behind the digital economy. Think of it as collecting tolls on the highways of e-commerce and AI every time a package moves or data is processed. For investors seeking both growth and exposure to the future of global commerce, PLD stands out as a top pick. It's a way to invest in the unstoppable trends shaping how the world shops and does business. Prologis is ideal for those with a long-term time horizon, or anyone looking to add a reliable growth engine to their portfolio. Its combination of stability, innovation, and global reach makes it a compelling choice. With unmatched scale, best-in-class property quality, and powerful industry tailwinds, Prologis is set to stand out in 2025 and beyond as a leader in logistics real estate. Consider adding Prologis to your portfolio if you're looking for a blend of steady income, high-octane growth, and exposure to the infrastructure that powers the digital world. Now, let's turn our attention to our final REIT on the list. Our third pick is Mid-America Apartment Communities, better known as MAA, a real estate investment trust that specializes in owning and operating apartment complexes throughout the rapidly expanding Sunbelt region of the United States. This area has become a magnet for both people and businesses, and MAA is right at the heart of this growth story. The Sunbelt, think states like Florida, Texas, Georgia, and the Carolinas, is where America's population and jobs are growing fastest. People are flocking to these states for their warm climates, lower taxes, and abundant job opportunities, fueling a surge in demand for quality rental housing. MAA owns and manages over 100,000 apartment units across 16 states, making it one of the largest and most influential landlords in the entire region. Their properties range from urban high-rises to suburban garden-style communities, offering something for nearly every type of renter. Their impressive scale brings significant operational efficiency, allowing them to keep costs down and maximize returns. By focusing on high-demand, fast-growing markets, MAA has consistently delivered strong rent growth, even when other regions have struggled. Unlike commercial leases, which can lock in rates for years, apartment rents typically reset every 12 months. This gives MAA the flexibility to quickly adjust rents in response to inflation, rising costs, or shifts in local market conditions, helping to protect their bottom line. MAA has increased its dividend for 10 consecutive years, a testament to its resilience and commitment to rewarding shareholders. This steady income stream is especially attractive for investors seeking both growth and stability. The company maintains a balanced payout ratio, meaning it doesn't pay out all its profits as dividends. Instead, MAA reinvests a portion into upgrading existing properties and acquiring new ones, fueling future growth and keeping their communities competitive. Financially, MAA is on solid ground. With an investment-grade credit rating and a strong balance sheet, they have the flexibility to seize new opportunities as they arise, whether that's acquiring properties or weathering economic downturns. With homeownership becoming increasingly out of reach for many Americans, thanks to high mortgage rates and rising home prices, the demand for quality rental apartments is surging. MAA is perfectly positioned to benefit from this trend, as more people turn to renting as a long-term solution. Their properties appeal to a wide range of renters, from young professionals to families and retirees, ensuring high occupancy rates and strong tenant retention. This diversity helps stabilize their income, even if one segment of the market slows down. Investing in MAA is essentially a bet on the Sun Belt's continued population boom and the enduring need for rental housing. As cities in this region keep expanding, the demand for well-managed apartments is only set to grow. The demographic trends driving this growth, like job creation, migration from other states, and a younger population, are powerful and long-lasting. This gives MAA a long runway for expansion and continued success. In summary, MAA offers investors exposure to some of the fastest-growing regions in the country, a track record of steady dividend growth, and a smart, balanced approach to managing and expanding its portfolio. For those looking to profit from America's shifting population and evolving housing needs, MAA stands out as a compelling and reliable choice. To recap, Realty Income for monthly stability, Prologis for growth in logistics and tech, and MAA for booming residential demand. Each REIT offers a unique path to passive income and long-term wealth. Diversifying with high-quality assets like these is a proven way to build financial freedom. Always do your own research to find the best fit for your goals. Thanks for watching. Like, subscribe, and check out our videos now appearing on the screen for more investment ideas. Keep investing with purpose.